Hello, this is Cal, and thank you for listening to another episode of Daily Reflections brought to you by Wise Financial Strategies. In this particular video podcast, we discuss strategies for long term investments in a post pandemic world. So, with that being said, I wanted to share an awesome article I came across published from the Journal of Accountancy. Now, this was published on May 26, 2021, and the author interviews Marcy Rossel, who's an economic forecaster and former chief economist at CNBC. And what Marcy talked about were five trends in a pandemic recovery that we need to be aware of that did not exist in the pre pandemic world. Some of these trends you may have heard on my previous podcast speaking about how to protect the long term strategies for investors. So, the first economic trend she discussed is the demand for the housing is real. It's not a bubble. And her take is that there's a bunch of millennials that were living in apartments that have kind of advanced their career to the next level and are now flocking to suburbia to have a bigger square footage house to accommodate an in home office. 60% of all future hires are going remote, and these millennials are anticipating from working from home. That's something that has never really happened before, and it would not have arrived if it had not been for the pandemic. Nonetheless, that's what's happening now. Depending on what phase of life that millennial is in, and depending on what their career path is going to depend on when they graduate to that change. So there's millions of millennials, and this trend is gonna be ongoing. It's not gonna stop. So the housing demand is going to keep at a pace that it's at now, and it's not a bubble. The second thing she talked about is that inflation is transitory, meaning that when products disappear off the shelf, it's not because there's a huge surge in demand. It's because there's a spike in inflation that's going to stabilize. For example, in March of 2020, I'm sure everyone remembers that there was a huge shortage of toilet paper out there, and it wasn't because there's a huge demand all of a sudden. It was because there was a lack of laborers from the pandemic to be able to place those on the shelves. Well, they knew that it would eventually stabilize, and it did. In fact, the same thing happened for hand sanitizer. And here recently, we're seeing a lot of what's happening with lumber echo that same pattern. So lumber skyrocketed to unfathomable levels, and now it's beginning to stabilize again. And we know it's transitory because the the wood mills or the sawmills are not expanding. They're anticipating it to stabilize, and they're right. It's going to stabilize. So we're going to see spikes of inflation that are temporary. The third element she talked about is labor shortages are here to stay. I think that she's spot on with this. If you look at the last 5 to 10 years, there's been a huge decrease in the amount of immigrants that are coming to the country, and a lot of entry level jobs held by millennials are now being vacated as they go to the next level of their career. So there's going to be a lot less people that are going to be able to fill those positions. And the example she gave was with the restaurants. There'll be a lot of order at the counter and then go and sit down, as opposed to having full service at every restaurant. Not to say there won't be full service, there'll just be less full service restaurants moving forward. And what's going to happen is that these owners or the employers of these restaurants and retail shops are going to have to pay higher wages to be able to fill those spots, because a lot of employees that would be working are now going to be working remotely, or they're going to be doing other, say, app-based functions like ride sharing or meal delivery services that can pay a much higher hourly wage. In fact, we touched on some of this on our previous podcast. So labor shortages are here to stay, and they're anticipating much higher wages for these employees moving forward in order to keep them long term. The fourth element is office needs will decline for years. And what she's speaking to are leasing office spaces, commercial properties, etc. As more and more employees start working remotely, it's going to drive down the cost per square footage of these establishments to low levels, and that's going to take years to get there, but it's going to be an ongoing trend. So you're going to see less and less leases signed, and you're going to see a gradual downturn of the office space, including office supply stores, etc. A lot of these employees are going to be working from home, and they'll be using delivery services like Amazon and other services out there to deliver that to their door, as opposed to going to brick and mortar stores like they did in the past. And the fifth trend she talked about, which I thought was great insight, is that managers are going to have to treat young people differently. I graduated high school in 1994, and I graduated college in 2001. I put myself through school working full time, so it took a little bit longer to graduate. But nonetheless, the world I saw at that time is much, much different than younger Americans are seeing at this time. When I was going to school, it was, there was a technological revolution. The internet was just trying to take shape. They launched Facebook, I believe, in 2004. You had the introduction of YouTube, the introduction of the bloggers. Basically, e-commerce as we know it now started back then. And so, of course, and then she specifically mentioned the fall of the Berlin Wall. So, a kind of a revolution of a high-spirited hopes for what's coming in the future. Well, younger individuals do not see that at all. What they're seeing is the recession in 2010. They're seeing trillions of dollars being pumped into the market. They're seeing rampant periods of volatility. They're seeing huge layoffs, corporate mergers, and they basically see the market completely different. In fact, she quotes, or one of her quotes is, recognize that younger workers will have to be managed very different. Their concerns will be very different. They will perceive the world to be much riskier, much harder place to navigate. The economy in their minds is very unfriendly, end quote. And I think she's spot on. If you look at how the job market's kind of fared over the last 10 to 15 years, it is kind of a reflection of all that, of the change, the polarized political environment, the repression of minimum wage, the just every element of the workforce over the last few years has kind of been very turbulent. And so these employers are going to have to be negotiated, or excuse me, these employees are going to have to be negotiated very differently with different benefit packages, and they're going to have to be a whole new strategy to keep their employment long term, to be able to fill in these entry level jobs moving forward. So a lot of great insight to what's happening right now. And of course, all of this happening because of the pandemic and how it shifted everything moving forward. None of these conversations would be relevant at all if there hadn't been a pandemic. So please stay tuned to several more episodes as we move forward. I thank you for listening. This is Cal with Wise Financial Strategies, and I'll see you soon.